Hey everybody, we are going to talk about gambling today. Not really gambling, but one of my favorite gambling related stocks, Vici Properties, ticker symbol VICI. Um, you may not have heard of them. They were a spin out of Caesars Entertainment years ago. They are known as the casino real estate company. We're going to talk all about them and why I like them in a recession and in what's going on right now in the market. Tyler Crowe is joining me. I think he likes it too, but we're going to find out in just a second. Before we dive in, please take a minute and check out the link you see on your screen, fool.com/Frankel. Get the top 10 stocks to buy right now. If you're looking for some good investments for your portfolio in these turbulent times, definitely check it out. I'll put the link in the description of this video as well, fool.com/Frankel. So if you're not familiar, I'll just quickly give a 30-second overview of the company. Vici Properties, I mentioned they were spun off of Caesars Entertainment, I want to say about 8 years ago. 2017, 2018 was when they actually IPO'd. And they were kind of used to remove a lot of real estate that Caesars owned from their portfolio. At the time, the big flagship property they owned was Caesars Palace in Las Vegas. So they still own that real estate. If you've ever been there, it's a massive, massive property. You can literally walk for a mile and a half and still be in the building. It's a huge place. They own a few other of Caesars Entertainment occupied properties in Las Vegas. Harrah's Las Vegas is one of them. A bunch of regional gaming properties. A couple of years ago, they acquired their biggest rival, the essentially MGM equivalent, MGM Growth Properties. That brought a few of the MGM flagship properties, MGM Grand, Mandalay Bay. They then acquired the Venetian Resort and all the land around it. They actually own the land that the Sphere is built on. So they're the biggest landowner on the Las Vegas Strip. They own a lot of regional gaming assets. One of the last times I saw Tyler was at one of their properties. I think we met up at the MGM National Harbor, which is a Vici property. To be fair, I made Tyler meet me there, and and it's it's top quality assets. Whether you're a gambler or not, it's a very, very nice property. This is what they own, these properties. They lease them on a net lease basis, long-term leases. The tenant is responsible for paying taxes, insurance, maintenance, and it's just a pretty steady cash flow business. But at the same time, with us potentially heading into a recession, is gaming real estate really the place you want to be? So, Tyler, I'll kick it over to you. I'm obviously a fan of the company. What do you think about Vici heading into a recession?
I am 85% okay with this business, and I'm just kind of throwing a rough number out there. It's not like there's any specific 85% why it's 85%, but here overall I think there's a lot of things that make this business pretty good. The most important part is all of its major gaming properties are under fixed leases that have escalators built into escalators, meaning like the annual increase in the rent it's indexed to inflation or CPI. So in terms of like what you can expect from this business over the next several years is quite stable in that they're leased for like more than 15 years. I think most of them are even into the 20 or 30 year range. And with
41 years
inflation,
on the average lease. 41 years.
Sorry, say again.
41 years remaining on the average lease.
Oh, even more than I was even saying. So better than that. Maybe we'll bump it up to 87% then. But inflation protected leases, very, very long, and they don't have a like performance component to them like you see with other like perhaps leisure or retail based sort of leases that will like take a cut of sales or something like that can end up being having a fluctuation. The fact that it's completely like set aside from gaming revenue or restaurant revenue or whatever, I actually think is a positive for them because it just makes them that much stable. Casinos, some do come and go. We have had bankruptcies in casinos before, but for the most part, some of the more prestige hotels in gaming properties in Las Vegas tend to stick around for a long time, can be pretty valuable. I know that like some of the big ones like MGM Grand and Venetian, they've gone through a couple iterations of themselves at this point. It's not just like the same property that it was, when it was built day one. So those are the good things about it, and it's pretty well diversified. It's also diversifying even more from just not just Vegas regional, also starting to get into like things like what is it, Bolero, like Bowleroo, the kind of chain of bowling alleys. I think they've also been trying to get into like Top Golf, some non gaming revving components. So I overall, I think it's a pretty solid portfolio, and it's a decent diversification for strategy that gets them beyond gaming. The couple things that give me pause is those like new growth components. Those are way more tied to like leisure activities that I feel like in a recession could get hit harder. Top golfs, bowleroos, things like that. That operators of those businesses may not be able to continue to operate them if in a recession were to get really bad. So that's those business I feel like are a little bit more exposed than these like prestige hotels. And the other thing that would make me ever so slightly nervous is there is a couple of properties in the portfolio that take up very large components of their like annual base rent. And I believe the Venetian is the biggest one by like a pretty wide margin. So if anything were to happen with the Venetian property, things could go a little sideways for Vici Properties in general. And so those two things are what I would say are the biggest risks for this business, and are like the 12 to 13% reason why I'm not like 100% all in on this business all the time. I own it. I continue to own it, and at a 5.7% dividend yield today, I'm certainly not giving up on this company anytime soon. But it, you know, those are just the things that they don't keep me up at night. But every single time there's like a quarterly earnings release or a press release, those are the things that I'll be looking out for.
See, and one of the things that gives me a little bit of pause about Vici, it's what they've been investing in the past, say, like 3 years, ever since interest rates have been high. You mentioned I think it's Bolarama or something like that, with the bowling alleys they bought. It's not those. It's that they've been using the high interest market to their advantage and making construction loans, essentially acting as the lender, not acquiring properties. Great Wolf Lodge is a big example of who they've been lending money to. They financed a Margaritaville resort in Kansas City, which I didn't know there was going to be a Margaritaville in Kansas City, but it's there. So they acted as the lender, which in some ways I like that move. One, it helps them make money in a high interest rate environment. Two, it gives them a natural kind of growth pipeline because they usually have the right of first refusal to buy these properties. Um, but as the lender of construction projects, if things go wrong, the economy goes bad and projects get abandoned or whatever happens, that part of their, the money that they're owed is at risk. So that's one of the things that gives me pause about that strategy. It works great if you have a high interest environment and a great economy. Um, but if the economy turns, I'm not so sure how much I like that part of their business. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 5 times. Go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 914% as of January 7th, 2025, and are measured against the S&P 500 returns of 174% as of January 7th, 2025.